Good afternoon. This is Arlan Suderman, Chief Commodities Economist for INTL FC Stone with the March 31 quarterly stocks and acreage report, and USDA did not disappoint. They had some more surprises for us. These reports are getting known for their surprises, and I've spent the last 2 to 3 decades really studying tendencies in USDA. Let me go ahead and get this up here, since we do not yet have sufficient regulatory reform to say it's not necessary, so we need to make sure we keep this up here long enough. But basically, as I've studied USDA tendencies, USDA does have some significant tendencies that we can look at in the reporting. But when it comes to these stocks reports, anything can happen in the stocks reports. There's no real tendency on whether they're going to be bullish or bearish. You can do all kinds of analysis, think what's going to happen, and it can be on either side. And USDA certainly had plenty for the market today. Once again, before we go into the numbers, I want to repeat, price is a function of supply and demand, but it's modified by the flow of money. So before we look at the supply and demand fundamentals, I want to make sure and look at what's the state of the money flow right now, what is the environment in which we throw these fundamentals into that is affecting how traders view them. And as we look at the dollar chart, we see this is a weekly chart, and there on the right-hand side you see that even though we were a little bit weaker today on the dollar overall, on the weekly charts we put in a reversal. Not a totally convincing reversal, but it certainly does suggest that we may have some more upside potential in this market. Now, it may be hesitant to follow through on that over the coming week because the focus very well may be a lot more on trade this next week, particularly with the Premier of China coming in on Thursday and Friday to meet with President Trump. He has been taking a more hardline stance once again over the last 24 to 48 hours on trade. Ahead of that meeting, the Wall Street's willing to give President Trump a lot of grace when it comes to moving forward with tax and regulatory reform because they trust his history when it comes to understanding the business implications of tax and regulatory reform. They do not trust him on trade. They're worried about what he may do in regards to trade. So we may see that kind of limit any growth in the dollar over the coming week until we get past that meeting. And then, of course, obviously something could happen at that meeting to set the tone. But otherwise, beyond that, this chart signal anyway would seem to suggest that we have some more upside potential in the dollar. And that tends to be negative for the commodities. But keep in mind, immediately after the election, we saw a contra-seasonal move of the dollar and commodities following the stocks higher. And that was because there was so much confidence that he was going to move forward with Congress on tax and regulatory reform, that the economy would grow not just in the United States, but globally, and that would increase demand for commodities. And the commodities also, that would also increase the pressure, inflationary pressures, and owning the commodities would act as somewhat as a hedge against that inflation. So we could possibly move back into that. I don't say that with a great deal of confidence because, frankly, Wall Street doesn't have a great deal of confidence right now, and we'll be watching those events very carefully. As we look at the dollar index and their CRB, you can see here minus 0.87 in the lower left-hand corner correlation. That suggests a very strong negative correlation between the CRB, or one of the major commodity indices, and the dollar. So as the dollar goes higher, commodities go lower, but as they indicated in recent months, that has not always been the case. So we'll have to watch this. There's been a little bit of an unorthodox market. You can see here that energy sector makes up a larger than normal share of the CRB. When you look at the CRB, we broke the uptrend that we were in, and we're now in a sideways trend. We traded down on this last break over the past month, the CRB there in the lower right-hand corner of that chart, toward longer-term support levels. And it looks like we want to hold above that support, and that the funds are actually seeing commodities as a buy here at this level, of commodities as a whole. So here again, I don't expect us to break to the upside until after the meeting. And here again, that's going to depend on the results of that meeting. But between now and the meeting a week from now, I think there's going to be reluctance to really buy into the commodities. Beyond that, it's possible we could see a little bit more money coming back in. And this is a comparison between the orange line, which is the CRB index, and the shaded area, which is net fund ownership of corn, soybeans, and wheat. So there is a pretty strong relationship. Upper right-hand corner there, you see a correlation of 0.73, which again is pretty strong. If we look at the continuous commodity index, that's more evenly balanced. So it's not heavily weighted toward the energies, but everything has kind of equal weighting in there. And here again, we've broken out of the uptrend. Now it's whether we can hold the sideways channel or not. So this will be key to make sure that we can. There's some sense that the commodities, the funds want to own the commodities at this level, maybe take us back up toward the top of that channel. But it's really rather tentative right now, and I wouldn't speak with a whole lot of confidence until we see a better trend develop. I did want to show you this, the impact of currency. The dark blue line here is the CBOT, or the Chicago Board of Trade price for corn. The light blue line converts that into Brazilian reais. And so you can see how the price is much better in Brazil relative to here. And one reason why they have such a big expansion of corn acres, we're estimating about a 7.5% expansion in safrinha corn acres currently, versus the drop that we saw today in U.S. corn acres. So the same market is encouraging expansion of corn in Brazil and Argentina, as well as in the Black Sea region, while discouraging corn acres here in the United States, largely due to currency exchange rates. The strength of the dollar does matter. Now, as we look at that same thing for soybeans, first I want to show you corn in Argentina. It's even more dramatic. So the first chart, let me go back. Oh, okay, now I understand. Okay, I'm looking at corn in Brazil and corn in Argentina. So it's even more dramatic because of the weakness of the Argentine peso. In Argentina, multi-year high for prices there. Now when we look at soybeans in Brazil and soybeans in Argentina, you see the same impact there. Now, let's look at the data. Within the context now of the money flow and what traders are seeing, now we look at the numbers. Corn acres, essentially at 90 million, just a hair below 90 million. We were looking for 91.6. Now, a month ago, I was at 90 million. But then we started seeing indications that the corn acres are coming back. Now, keep in mind that today's USDA report is based on a survey from a month ago. We can argue it, and a lot of people argue the acres, but the fact is these are the numbers the market will trade, and so that's what we will put in our balance sheet until the June 30th report, when USDA surveys again on June 1st, and we'll talk more about that later. So 90 million acres of corn, and our bias is that that may go up, but here again, that's going to depend on planting conditions. We know from history that if it's warm, you got good moisture in the soil, but dry planting conditions. In other words, you have soil moisture, but it's dry enough to put the corn in, and the soil temperatures are warm. Farmer tends to order another unit or two of corn and to put it in. And so that could go up. That's been historical tendency. On the other hand, if it stays wet into the month of May, we could see some of those acres come back up. Soybeans, 89.5 million acres. Now, some of the survey data we've done over the last several months has shown the possibility of 90 million acres. But the latest survey data said that maybe we're backing off those soybeans a little bit. So I really wasn't surprised by the 89.5. The question is, where do we go from here into that June 30th report? A lot of that will have to do with price. We saw a big break in price today. If the market continues to tumble, that obviously is going to affect some double crop acres. On the other hand, if we have trouble getting the corn crop in, we could push soybean acres even higher. Wheat at 46.1 million acres, pretty close to what the trade was anticipating, and that's largely because that spring wheat number. Now, I did expect winter wheat acres, based on our work, to winter wheat acres to erode just a tad lower, not significantly, but a tad lower. Instead, they went a little bit higher. That was a surprise to us. as well as the spring wheat acres. You out there have been telling us that farmers are running fast from spring wheat acres in the northern plains. That really did not show up. Now, the spring wheat acre number here that they're looking at does include spring white acres. Spring white wheat acres. When you look at hard red spring as a specific class of wheat, it was at 10.6 million acres. Durum at 2 million acres. This does tighten things up a little bit for the durum market and should support that market overall. Now, as we look at stocks, all three, corn, soybeans, and wheat, came in higher than what was anticipated. And so we'll see this then factored into the April 11th supply and demand reports, the domestic, in the way probably of some ratchet down demand. Now, it'll be interesting to see what they do in soybeans, because you have two primary demand components for soybeans: exports and crush. Both are measured on a regular basis, so we have a pretty good handle on those. So 50 million bushels over the trade expectations, 100 million over our expectations. That would suggest that residual use, whatever that is, that's just kind of a buffer number, was less than anticipated. That USDA understated last year's crop, that the crop actually came in bigger than what USDA thought, a higher yield, or perhaps it was statistical error. So we'll have to look at the June 30th quarterly stocks report and see what happens then to give us some idea what USDA is going to do with the extra acres. But for now, I anticipate USDA will reduce residual use acres, bushels, and that we'll see stocks correspondingly move higher. Now, we talked a little bit about what sentiment was in money flow. I did want to throw this in, as we did a Twitter survey for what it's worth. Wanted to get a little bit of feel for what we're seeing in the way of producer attitudes, which goes into their decision making, and on the banker having an influence. Roughly 60% of you told us that the banker was having very little influence this year. Nearly a quarter said that the banker was providing some input on what they'd like to see in the way of acres. 18%, almost 1 in 5, said that the banker was putting significant pressure on in those planning decisions. Also, it indicates that the producer out there is very discouraged. But you look at 42% quite discouraged, 27% discouraged, but things are improving. Overall, only about 11% surprisingly optimistic. About 1 in 5 were moderately upbeat. Looking now at the specifics of this report that USDA gave us, you see that corn planted area went down almost everywhere. We did see a little bit of a bump for Kansas. Again, these are planting intentions numbers, but pretty much moving down. Look specifically at Iowa, dropping 600 million. All the indications we had, and I shouldn't say all, but most indications we had, is the farmer in Iowa and Illinois really didn't want to switch too much. Saw 600,000 acres decline in Iowa, 300,000 in Illinois. Significant drop in Minnesota. Not really surprised by that. Kind of anticipated we might get a little bit of a shift there. No change in Indiana and Ohio. I think that was a little bit of surprise. Overall, Nebraska down 300,000 overall in corn. Soybeans increasing virtually everywhere that matters in the soybean production there of the state. We'll look at Iowa, up 600,000, exactly what we lost in corn, so we did see that switch. And frankly, when you look at Iowa, their soybean to corn price ratio, excuse me, not price, but acreage ratio, certainly favors corn. They had some room to let go of some corn on corn acres and move closer to a 50-50 rotation there. Big increase in soybean acres in the northern plains. Big increase, look at 850,000, almost 1 million acres in North Dakota, almost 1 million acres in Kansas. Those are the two that really stood out. But almost 3/4 million acre increase in Minnesota. When we look at corn and soybean acres combined, no change in Iowa, as you see, and the same with South Dakota. Generally across the north and in the central plains, we saw an increase in total acres. and you look across the south and kind of the Ohio River Valley, southern Ohio River Valley, perhaps Illinois, Missouri, we saw a decline in acres devoted to corn and soybeans overall. So I just thought that was kind of interesting. Take a look at some of that tendency. Spring wheat, 600,000 acres lost in North Dakota, some more in Minnesota and South Dakota. But look at the big increase that we get in the Pacific Northwest. This is certainly, as Michael Day was telling us, going to give us some interesting dynamics as we go into the Pacific Northwest and the wheat that'll be available to them. On the durum acres, this really does change the dynamics here too. Look at the Northern Plains area, all the durum that we lost in that area. So basically 400,000 acres of durum lost between just North Dakota and Montana alone, let alone a few lost in South Dakota as well, although there's not a lot grown in South Dakota. Cotton was a big winner. We saw this and anticipated this, 12.2 million acres. When you look at the cotton numbers, run the crop budgets, it just really does favor putting cotton in. If the soil and the climate can handle cotton, a lot of people are doing it. We heard reports of a lot of equipment being bought for cotton, which means farmers are looking at probably a 2 to 3 year commitment to increasing their cotton acres. And the USDA put this slide out, we thought it was pretty interesting. Look at the 6 million acres of soybean increasing, cotton up 2.1, almost 2.2 million acres, a little bit of an increase in canola and dry bean. About a 500,000 acre lost in barley, rice, 2/3 of a million acres of hay gone, almost 1 million acres of sorghum gone. Sorghum come in at what, 5.7, I was looking for 5.8. Wheat lost about 3.4 million acres, corn lost 4 million acres. So it's just interesting to look at the shift in acres overall. When you add up all the principal crops that are going to be planted, at least farmer intentions to plant, we see some significant declines in acres in the plains, stretching down in the southwestern Midwest. Some increased acres in the northwestern Midwest, particularly Minnesota, Iowa, Wisconsin, and then in the east, net increase in principal crop acres. And I get questions all the time, where do the acres come from, or where do the acres go? And frankly, there's not always a good explanation. A lot of it has to do with sampling error, statistical error in the data that you get from year to year, but you're going to be very frustrated if you try to make the acres balance from year to year thinking it's a zero-sum game, because it frankly isn't. This shows you typical crop progress we see for planting the corn crop there in the red and the soybean crop in the green, and the delay that we see between when the survey, which was just announced today, the planting intention survey, when it is done and when farmer actually plants, and that tends to affect some decisions. And then you can see where we're at when we had the June survey, and you'll notice that a lot of the soybean crop still is not planted when we do the June survey, which is why we tend to still see some adjustments there going into the last half of the year and into the January final numbers. With that in mind, what does it all mean? With these acreage in mind, what does it mean? Well, first of all, let's look at weather. April's looking to have kind of a wetter tone to it. In the Delta, in the Mid-South, working its way up into the Midwest. So it could be some wet. We could see some planting delays. That looks like a fairly decent probability right now. That improved somewhat for much of the Midwest in the month of May. And that's key because the farmer can plant the bulk of the crop in 10 days with today's equipment. But this is something we're going to have to certainly watch and see what happens. Now, when you look at the latest models, there's, I think, 22 models for what's going to happen with the tropical Pacific and the ENSO cycle, meaning El Nino versus La Nina. And certainly are pointing toward a neutral to weak El Nino, and now that it's simply starting to improve toward a moderate El Nino. Sea surface temperature anomalies need to get above 0.5 degrees Celsius in order to have a weak El Nino. and above 1 degree Celsius to get a moderate El Nino. Now, talking to Joel at Commodity Weather Group earlier this week, and was with him on the program at our client meeting in Bowling Green, Ohio. He expects us to move into an El Nino, meaning that sea surface temperature anomaly above 0.5, probably by late April, but that could vary a little bit either way, probably by late April. Question is, where do we go from there? As they've looked at, I think it was 11 of the best performing models, I believe it was 8 of them had us moving into a moderate El Nino. So the confidence is growing that we'll be in a moderate El Nino by summer at this point. So we'll take a look at what that means. Now, there's been a lot of chatter out there, and I'm calling attention to the graphic on the lower right. There's been a lot of chatter out there by some well-respected analysts. I don't want to take anything away from people that I respect, talking about when you have drought in the plains, as we've had up until this week, or if you have drought in the southern Midwest, drought in the southeast, that drought is going to expand this growing season up into the Midwest, and it'll be a hot, dry summer. So Commodity Weather Group has taken a look at this from many, many different angles, checking out all these things. And most people are in agreement we're going to have a weak to moderate El Nino. So they looked at those years that we had a weak to moderate El Nino, and then we had drought conditions, southern Midwest, southeast, plain, looking at all these different, and there were years when the Midwest turned out to be dry, hot and dry. There were years when it turned out to be mild and wet. The overwhelming majority, let me back up, I think it was 7 of the best performing models, 5 of them projecting moderate El Nino, and they looked at the comparisons out of the driest 11 or so. 8 of them turned out to be a rather mild and damp Midwest. So that you see the tendencies here. The years that ended up being dry ended up being years when we were largely cool off of the West Coast. Our sea surface temperatures were below normal off the West Coast, and especially the Baja of California. The years when we tended to be wet, got above trend yields, tended to be years when we were cool off the West Coast. So the graphic in the lower right of this page shows you the current condition. Sea surface temperatures are pretty warm off the West Coast, particularly the Baja of California. The models project that this will continue. Now, maybe the models are wrong. Now, whatever tends to happen in the spring in this area tends to lock in for the summer as well. So this is a pretty key period. But we could still be wrong. The models could still be wrong. But right now they're warm, and the models are saying they're going to be warm. So I wouldn't bank too much on a hot, dry summer. Now, and we'll talk about in a little bit here what the implications are for that. Another thing we look at is how this all plays out for the jet stream. And when you get the cool readings off the West Coast, it tends to bring more amplification in the jet stream, meaning you bunch things up, you slow down the systems, you get more movement of warm and cold air, and that gives you more opportunity for ridging over the Midwest. High pressure ridge developing, dome of doom, if you will. You've heard that term used. When you're warm over the west, sea surface waters over the west, off the West Coast, tends to flatten things out more, particularly when you get the entire Pacific more warm. Now, we do have some cool waters in the Gulf of Alaska, but generally the models are looking for that to moderate. That tends to straighten out the jet stream, tends to moderate things more. We tend to get a lot of moisture moving across the Midwest, and the systems move through, but with frequency, and we don't get the ridging effect. Now, this is basically what the dark blue line is what is generally expected. You see the dotted red was for the drought years of 88 and 12. And when you get that consistent warm waters of the Pacific, you tend to get a further southward biased jet stream or storm track. And what they're basically looking for this year when they look at the waters in the Atlantic and the Pacific is basically a straighter, more zonal flow, but maybe getting pushed up here in the east due to the drought conditions we have in the southeast and the warm waters in the Atlantic. That could end up leaving Ohio dry. So we're going to have to watch that for those of you in Ohio. But the rest of the Midwest is looking pretty good. There we go. Now, let's put all these analog years, and there's a lot of them, into hot, dry years, hot, wet years, dry, cool summers, and cool, wet summers. And we're looking at summers in all these. And what we find is 25% of those years ended up hot and dry. And that's pretty okay. And so below trend yields. That's much it for the below trend yields. Look at this, hot and wet, 8%, but here we get corn yields almost 4% above trend, soybeans almost 5% above trend. 1 in 3 chance of a dry but cool summer. So that's pretty good odds of dry, but cool enough that you still get, here again, 2.6% above trend yield for corn, 2.1% for soybeans above trend yield. 37%, a little higher yield odds for a cool and wet summer. 7% above for corn, 3.6% for soybeans. You put it all together and you got better than 3 and 4 odds that we're going to have above trend yield this year based on these analog years. That's not something that I want to really play Vegas and be bullish going into the growing season on. Could it be that 1 and 4, the 25% ends up hot dry? Yeah, it could. That's betting against the house, so to speak. And to do that, history would tell us we need to see those sea surface temperatures off the west coast of California, Baja California, turn cool. Okay, now let's take a look at what it means. I plug in the yield, a trend yield of 170 bushels on that 89.996 million acres that USDA said. I cut exports by nearly 3 million metric tons, 300 million bushels, 300 million bushels, largely because of the big crops in South America, and I get ending stocks of 1.878 billion bushels. That's not bullish. It is less bearish. It's not bullish. It is less bearish. Now, let's say that we were originally right in our March survey, our client survey, and we come up with 91.6 million because it turns out to be really nice planting conditions and the farmers are shifting toward corn. 91.6 million, and we have a repeat of last year's yield, 2.2 billion bushels. That is less bearish than what we have this year. So, and we get a marketing year average cash price of $3.45. Now let's say that it turns wet, it stays wet, it's already turned wet, but it stays wet. We only get 89 million acres planted, but we have some adverse weather later in the growing season. We knock 5 bushels off of the yield, do a little sensitivity analysis. We end up with stocks of 1.27 billion bushels. Here again, no need to ration with higher prices, but with the fund investment in the market and becoming a little bit more conducive toward owning the commodities, I would say that probably gives us a rationale for spiking above $5. Here again, this is not a scenario that we expect to happen right now. We're expecting, if anything, probably to favor an increased acreage by the June 30th report and yields to be above trend, but this is a rational possibility. I just would not want to bank the equity in the farm on it. Now, soybeans. When we put that amount of acres in, it really amplifies whether you're above trend or below trend yield, as we'll see here in a little bit. I do, and what I do, I need to explain this on the demand side. You're probably not going to see too many people out there projecting ending stocks below 500 million bushels. As I've done my global balance sheet, even with factoring in the big South American crops of Brazil and Argentina, when I look at the demand side of the balance sheet and where that's going to come from, I still have to increase U.S. exports. And it still leaves us in ending stocks of almost 500 million. It's a little below 500 million, but it's bigger than this year. Marketing year average cash price of $9.10 per bushel. Now, what if we do add another 500,000 because weather and so 90 million. But more than that, more significantly than that, we get a repeat of last year's big yield, 52.1 bushels per acre. That pushes ending stocks over 900 because the bigger acreage amplifies changes in yield. On the other hand, if we go back to our original 87.3 million acres that we submitted based on our client survey in March, and we pull the yield back 5% from trend, we get a 174 million bushel ending stocks. Again, not necessary to ration demand, but the market would look at that as a very narrow margin for error going into the South American growing season. And it would suggest a marketing year average cash price of $11.75 per bushel based on history and the cash market. Now, so before we look at wheat, I want to look at one other thing. This light to moderate El Nino would suggest strengthening dryness for Australia and their wheat production. So that reduces production overall. They're expecting just going to more normal yields. They're probably looking at dropping total production by nearly a third, a little over a third. So that should help to some extent tighten up the global balance sheet. We're going to have to really watch the dollar. Wheat is particularly subject to that. But when I put in today's acreage number and a trend yield of 47.5, similar to soybeans, I drop ending stocks below 900 million bushels. That's down, what, 230, 250 million bushels. So that is significant. It's not bullish, but it is less bearish, like what we saw in the corn. If I use a 46.5, suggesting we get a little bit more spring wheat acre in there and a repeat of last year's yield, then we're at 1.1 billion bushels. Here again, I don't expect that, not with the problems we have in the winter wheat belt. If I use our acreage estimate, which has considerably fewer spring wheat acres, then we're looking at drawing stocks down to 634 million. That is a possibility. It's probably a bigger possibility than the bear scenario. Again, that doesn't necessarily mean that we need to ration demand, but the attitude I do see from the funds, we saw it play out today, is some sense that maybe the worst is behind us. Maybe this is the time to buy wheat and sell soybeans. I mean, that's what we saw kind of play out today. And depending on what happens with the dollar and some of the outside markets, we could see more of that. So what are your take-home points? Well, USDA had nothing but bear food for soybean traders today. We broke key support on the charts. We did get back above 950 for the nearby. But I think there's some real risk here in this market. And Monday's reaction is going to be significant in ways of giving us some indication of where we go from here. But at this point, it's going to be pretty tough for the bulls to build their case until or unless we have a significant weather problem develop, either through persistent rains in Argentina during the harvest or some problems with the U.S. Midwest. Demand remains strong, but so is production. If that production ever falters, then we could get a demand-driven rally. But the production has to falter, at least the perception of so. The margin of error got a little bit smaller for corn, so it does come down to weather. But the numbers overall not as bullish unless we see a weather event. The worst case does appear to be behind us for wheat, with acres likely to decline more in the northern plains. So this is something we're going to have to keep our eye on and watch, as we could still see some money flowing into the wheat market, particularly in some of that spreading against soybeans. But in the end, all of the money, if the funds are favorable toward the commodity complex at all, they're going to focus on the more bullish fundamentals of the grains. If they're bearish to commodity sector at large, they're going to focus on the bearish fundamentals of the grains, and it doesn't look good. So follow the money. We are expecting to see things loosen up as we get into mid-April, really beyond the next week, something we're going to have to keep an eye on. So with that in mind, it's time to move to the questions. And Greg asked the first question today: what are your thoughts about double crop soybeans after wheat this year? If we continue to see this price break I think double crop soybeans drop, and I think we probably drop off, and we'll probably drop closer to that 88.5 million acres of soybeans. If we see this price stabilize in here, then I think we could very easily see the 99.5 million acres. So that's kind of what I see on double crop right now. When you look at where we're at on a profit margin standpoint, it's going to be tough. A lot of those decisions are going to be made here very soon as we enter into the holiday period for Easter and Memorial Day. Francisco, can you elaborate more on the impact of El Nino in the second half? How does it impact South America planting intentions and conditions? I didn't review this today, but as my memory serves me, the areas to watch with the strengthening El Nino are the most affected areas are going to be Australia and Southeast Asia. On South America, you can see, if I got this right, dryness in Argentina and southern Brazil, but the confidence is lower in that. It is something we're going to have to watch, and I appreciate the question. Hope that helps answer your question. Do we have some other questions coming in here today? There we go. Why the jump in soybean oil after the report today? A question from Jerry. You know, I wasn't watching the soybean oil market because I was so busy looking at these numbers and everything. I was going to get back to it afterwards. I should have taken a glance at it. But I will tell you that when we look at global demand, it remains very strong. When we look at biodiesel in particular, one of the things we're going to have to watch is whether the Trump administration does anything to limit the movement, and it's a huge movement north now of biodiesel from Argentina up to the United States. He very well could. Is that the right thing to do? Well, I've heard good arguments why it's not the right thing to do. I've heard good arguments why it is the right thing to do. But basically what the history says that when we stop the flow of biodiesel into the United States, we increase the flow of soybean oil into the United States, and it tends to offset each other one-to-one. I'm anticipating there was something on the demand side of the equation, but I also anticipate that we had some bear spreading between selling soy meal on the higher acreage and buying soybean oil. A copy of the presentation, I would ask you to send me an email or your broker an email. Either way is fine on this, and I'd be happy to provide you a PDF copy of the presentation. On the global wheat, I see those numbers of surplus bushels starting to decline on a global basis as well. It'll probably take a couple of years to work through this because it was basically a record large supply, but I do think we're moving in the right direction. Global wheat production, I think is going to be down. We do have, I mentioned Australia, a pretty good crop in Argentina. The Black Sea, we had some damage, it looks like last night, to 10 to 20% of the crop in Russia from freeze. I think the Ukraine, we have some dryness there. It's concerned the crop is pretty good overall now, and we just got some moisture through there, but expected to dry out again. Overall, the tendency is to remain dry. So we have to watch that Black Sea area pretty well. History says, regardless of what's happening in the United States, if you have a drought in the Black Sea, you're probably going to take U.S. wheat prices higher. Doesn't always make logical sense, but that's frequently what happens. It makes more sense now than it did in 2010 because more of our world's wheat supply comes from that area. But that is something to watch. Overall, it's another reason I expect to see global supplies work lower of wheat. Brock says, what are your thoughts on basis moving in the summer months into your market? Well, looking at some of the basis charts, we're already seeing expectations that the farmer's going to dump corn in those summer months already priced in. And I would anticipate that that will hold, but we could see a little bit of firming up with the lower acreage and some ideas some farmers may just hold over corn into next year. Your spring wheat estimate was off quite a bit. Any particular reason why you were surprised? Yeah, I tried to address this to some extent, but basically I was surprised, and I still expect that number to come down because not only from our client survey, but just talking to seed dealers in the area selling spring wheat seed, talking to farmers, talking to commercials, they were saying the farmers were running from spring wheat as fast as they could. And see it only down total spring wheat acres outside of Durham, only down 250, 300,000. That's why I was surprised. Let's see. Scrolled on. We want to make sure we didn't. Okay, no, didn't miss a question. Yui asked, does corn and soybean price always move inversely? How perfect are the substitutes? Are they between the two, especially in feed ration? No, they don't. They tend to move together a lot. You get a report day like this, and they'll tend to move opposite, but otherwise they tend to move together. We have plenty of stuff, and that's the big problem for corn right now is the big supply of wheat. And another reason I think we'll continue to decline the stocks of wheat overall, but still nothing bullish, because we do substitute wheat, particularly on a global basis, much more here than in the United States. We tend to substitute wheat into corn rations. Anthony asked, what about domestic use of corn in Brazil? Well, they export as much as expected last year. They essentially ran out. Well, when you run out, first of all, you're going to absorb some of that. You got to refill the pipeline. So that'll reduce exports, what they otherwise would have been. The other question is basically we've heard 250. I think the better number is probably 220 per bushel to haul corn out of Mato Grosso, which is the core of the Safrinha Corn Belt, where the bulk of the exportable supplies are grown. I think 220 is probably a better number going from Mato Grosso and Imperios, because Mato Grosso is 1.3 times the state of Texas. 220 per bushel. If you look at the price of corn being offered at the port right now in southeast Brazil, it's $4.38, and this is for August delivery, so it's Safrinha corn, $4.38 a bushel as of a few days ago when we looked. So that means $1.18 per bushel is what they would buy it in Mato Grosso and ship it to get $4.38 at the port. So that means freight costs more, and from that standpoint, I think farmers would just hang on to their corn. Now, we did see a few years ago where Brazil subsidized the freight, and if that happens, then we could see a lot of corn moving to the export market. I still think we probably see a pretty healthy export market, but if they subsidize the freight, it really dumps our corn market in the pits. If they don't substitute freight, then it is a factor, and I think farmers here will try to stretch their luck there. But overall, right now, I am leaning toward expectations that they're going to get shipped for the most part, not all of it. We'll build stocks of some of it, but for the most part, get it moved. How about domestic use of corn in Brazil? Will they export as much as expected? Last year, they essentially ran out. Domestic usage is a real problem now with the meatpacking scandal. Otherwise, I think we would have seen an increase in beef, pork, and poultry production to consume these extra cheap bushels that are going to be in Mato Grosso and surrounding areas. But this packer plant controversy in Brazil affects beef, pork, and poultry consumption and demand. And so we're seeing a significant pullback at this point in packers buying animals. Therefore, we're seeing a significant pullback in demand for corn. And I think this is probably going to continue probably into the summer, our summer, their winter time. So that's a real problem for the market to try to figure out going forward. Is there any way to know the total amount of anhydrous ammonia sales by tonnage from period to period? Could this be an indicator? This is something that we're continuing to try to work on, try to get this done. You can look at fertilizer movement, but actual sales becomes more difficult, let alone actual applications. We continue to work on this. How confident is South American crop size? Brazil estimates are starting to sound like an auction. Your own estimate. So South America, we will get our official estimates from Brazil team on Monday, have those available to you so you can contact me back. For Brazil, I'm looking for something north of at least 95 million metric tons. We're seeing others estimating 95 million metric tons. Our Brazilian team was at 93.3 a month ago. We'll see where they end up come Monday. Feel free to drop me a note on that and see where we end up. Argentina, probably looking at 37.5 million metric ton of corn, and on soybeans, probably looking at 57.5 million metric tons of soybeans. So pretty good sized crop overall. All righty. Is there any way to know the amount? Okay, I asked that on tonnage, how confident. Okay, now let's. Where on the USDA website was the slide with the acreage change by state? That's in their executive summary. So I can't describe it here when I don't have it in front of me, but basically it's their executive summary. If you do a search of their website, you should be able to find that. Do you have a December 17 future price range guess for Chicago wheat? Oh, I worked on that for corn. I'm looking at right now we've got a nice reversal in corn. We held well above the 375 support area, but I think we see significant farmer selling coming in by December $4 mark. So I think that gives you somewhat of a range, and of course weather becomes a factor from this point forward. For wheat, my mind has drawn a blank on that. I apologize. Is the Trump administration going to adversely affect our commodity markets or have no bearing on them in Europe? I think it's affecting it by way of money flow, which I talked about earlier. If the funds are worried about a trade war and not getting tax and regulatory reform, they're going to be worried about the domestic and global economy and the impact on export demand for commodities. If those things move through smoothly, and it looks like we're going to repatriate $2 trillion of corporate profits overseas, from overseas, then the funds feel better about demand, inflation, etc., and they're buying the commodities. So I think that has a big influence. I already talked about Brazil soybeans. Any other comments out there? We've been going for 47 minutes. That's kind of the extent of what we've done in the past, but if there's one last quick question, I'd be happy to take it. Otherwise, I think it's time for a little bit of lunch. So with that said, I do want to thank all of you who filled out our surveys that we've done this winter. Thank you very much. That's really made a big difference. Thank you for that comment, Francisco. And I want to thank you for attending today. This has been really great. I appreciate the questions. I appreciate the opportunity to present and interact. So thank you, and we'll be back on April 11th with the USDA crop report at that point. Thank you.